Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. MP Materials is up 40% in a month in August. And if you're thinking about chasing it, don't. I'm not. I have a number 52 to 55. It's currently at 58.74. That's the pullback level I'm waiting for, and I won't touch this thing until it gets there and holds. In this video, I'll show you why 52 to 55 matters on the chart, exactly what has to happen to get me to purchase, and the one number, a daily close below 48, that tells me the whole setup is dead. That's my stop level. If you follow rare earth stocks, this is a level you need on your screen. So let's get into it. So the 40% run, what sparked it and why a vertical move is the worst place to chase an entry. And what is the price projection here? So what sparked this big move here, this 40% move so far this month? Well, I'll refer to one of my tools that I reference, or a market technician references. Again, I'm a chartered market technician, a CMT, been doing this for 25 years or so. And so go into my trusty toolbox and I pull out a tool, the Elliott wave theory, which believes that trends or cycles go in waves of five, with one, three, and five in the direction of the bigger trend, and two and four are counter trend reactions. That's what makes markets so tough. They don't go in a straight line. So fast forward to July of 2024, way down at $10. We have a one, a two, a big third wave. Third waves are the most powerful and most profitable, just like back here. We're getting a fourth wave correction in the form of a bullish wedge, which is counterintuitive as it's downward sloping, but it's with an uptrend. And prices broke out of that and then came back down and tested the apex of that bullish wedge and stopped right there. And so we're expecting the fifth wave finish to new highs. So the prior high was 100. I'm expecting 102 to 103. It could be 110 for all I know, or 120. But I do expect new highs. Um, so that's one reason why don't you want to chase something like this? Well, number one, I just don't do that. I wouldn't buy something when it's up 40% in 2 weeks. And when I turn to the point and figure chart, another tool that a market technician has in their toolbox, this is the least subjective chart where I draw lines on the previous chart and make interpretations. This is really strictly supply and demand. And you can see that we have a bearish trend line in place. And it's been in place. And where did prices go to? Right to that bearish trend line. So it's very rare that you're going to have this big of a move and break through a bearish trend line with, after traveling this far. Most likely you're going to get a pullback and then try it again. And so that is one reason why I wouldn't chase that. Here's where we're looking for 55 to 52, somewhere in here. So, it's maybe, what is that? Maybe 7%, 8% pullback from here, and I'd be a buyer. The other reason why I wouldn't chase it here is that this is what's called a pull. Any column of X's or O's in downtrends where you have 10 or more X's in a row, that's telling you that it's overextended and you're probably going to get a pullback of some sort. So both of those things on the point and figure chart are telling me, don't chase this thing right now. It is pulling back. I want to see a pullback just a little bit more. And the price projection based on the point and figure chart is 107. So, my downside is, I don't know, somewhere around $5 or $6, and my upside is 100. Let's just call it 100. If I buy it 55 or 52 or something like that. And so my reward to risk is massive, 15 to 1 or something. And that's very, very attractive. But I want to be patient here. I'm going to be methodical. And if it goes to the moon, I'll buy something else. Okay, so this is a short-term chart. This is a daily chart. Let me just reference this a little bit. So this is a monthly chart. Each one of these candlesticks represents a month of price action. Now we're going to go to where each one of these candlesticks, Japanese candlesticks, they represent one day. So we're going down to a very short term look at this. It's really this part. I always start with longer term patterns and I work my way down to shorter terms to give me entrance points. So here we have it. We have this big up move in August, and you can see that we're getting a confluence of moving averages all coming together. And those of you that follow me, you know this well. And it's called a rainbow convergence. That's a la Tom McClellan, a really great market technician. His parents developed the McClellan oscillators back in the 70s, I believe. And so I want to give him kudos for this tool. Again, I'm in my toolbox. And when these all come together, there will either be a type 1 convergence where this pauses, um, or it will have a retracement back to the convergence. I'm expecting with this big of an overbought condition that we get some sort of a pullback to this convergence around 52 to 54, 55. So, um, anywhere in here, I'm going to be a buyer and I'm not going to be, try to be too fine. So this is the area that we want to buy at. And so that's the setup. If it were to break this confluence of moving averages, um, I have no place to hang my hat. I'm not going to let it roll all the way down to the apex of our bullish wedge. If I'm wrong, I'm going to get out. So let's say I'm lucky enough to buy at 52, I got 4 points of risk. That's, I don't know, 8% maybe. But my upside is over 100%. So this is going to be the buy point, and this is if I'm wrong, I'm out. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. I've traded this successfully 4 out of 5 times over the last year and a half. I will be doing a buy. If it does hit our buy area, I will do an update. So please subscribe. It's a lot of work to do these, and tell your friends and neighbors and family. Have a great rest of your weekend. Adios.